Security Token Industry is here, and you can get involved. Coming up on this episode of Security Token Insight, the co-founder and president of Securitize talks about security token standards.
Plus, details on our next Security Token Meetup. That and much more is coming up on this episode of Security Token Insight.
Hey everybody, I'm Adam Chapnick.
And I'm Amy Wan. Welcome to Security Token Insight, brought to you by the Security Token Academy. The security token industry is here and will provide a key foundation for the evolving financial internet.
The Security Token Academy provides insights about this new era for security token enthusiasts, investors, and issuers.
Coming up on today's episode of Security Token Insight, in your security token investing news, Securitize receives funding from Coinbase. Find out why. We've got an expert interview with the co-founder and president of Securitize, Jamie Finn. Plus, learn about token economics from the Prysm Group's Dr. Stephanie Hurder. And we'll let you know the date of our next Security Token Meetup. That and more is straight ahead.
Now it's time for your security token investing news. Start Engine is looking to raise $10 million in its STO. The Reg D offering is open to accredited investors with a minimum investment of $10,000. The company plans to launch a broker-dealer and alternative trading system called Start Engine Primary and a security token trading platform called Start Engine Secondary. Start Engine is a gold corporate member of the Security Token Academy. Security token platform Securitize is also making headlines this week. Their DS protocol allows for security tokens to be traded in a compliant manner on global exchanges and marketplaces. Securitize just announced it's raised more than $12 million in a Series A round. Participants in the round included Coinbase Ventures, the company behind Coinbase Exchange. Other companies that backed the round include Blockchain Capital and Ripple's Spring Fund. And finally, Securitize is poised for a global expansion. The company is partnered with Elevated Returns as it looks to expand security tokens in Thailand. The partnership will allow Elevated Returns to boost their real estate tokenization program in Southeast Asia through the Securitize platform. Securitize is a gold corporate member of the Security Token Academy. You can find more information about Securitize as well as about Start Engine on our website, securitytokenacademy.com. Just click on the directory.
Speaking of Securitize, I had the privilege of sitting down with the co-founder and president, Jamie Finn, at the Start Engine Summit in Santa Monica. Hear his thoughts on token standards and more. Take a look.
There are a proliferation of security token standards out there. What is going on? What's happening? Why are there so many?
Well, I think it's a great question, right? So I think we've seen over the past few weeks any number of different companies launching standards. And if you have a number of companies launching standards, by nature, those are not standards.
Yeah.
And so we're kind of looking at this thing backwards. Everyone's obsessed with standardizing something that nobody knows how to do, right? And so in our world, what we've been learning is as we go and launch these things with actual marketplaces and exchanges, it's much harder than it appears, and everything you thought of that was right, guess what? You forgot something.
Interesting. Are there any standards in particular that you think right now are getting a lot of traction?
Yeah, ERC20. Honestly, we don't need anything else. People have gotten obsessed with it.
ERC 1400?
I don't believe in 1400, 1450, 1442, 14 whatever. None of them matter. All that stuff is noise because it's being deployed by companies who haven't actually issued any security tokens. So people are talking about standards, they're not actually deploying. What we need in this space is to get actual tokens in investors' hands.
What are you seeing now in terms of standards on other blockchains aside from Ethereum?
Yeah, I mean, we've been looking at a lot of different blockchains. There's some really interesting ones out there. We've had great conversations with the Neo team, with Cardano, with Stellar, and we're really kind of digging deep, and even EOS, digging deep to understand how we would deploy our protocol in those environments. And for the most part, we found that actually most of what we've built will actually work on these different blockchains. There is some engineering effort, but again, at the end of the day, we're waiting for the full ecosystem to develop around it. So what Ethereum has, which is very powerful, is this ecosystem.
Yeah.
They have wallets, they have exchanges, consumers are learning how to use it, investors are learning how to use it. Now you have to learn how to use an EOS wallet. I own a bunch of EOS, but I don't actually know how to use it.
Interesting.
I should probably learn that.
Interesting. So, given that there's so many competing blockchains, right? Do you think the future of security tokens is going to exist on public blockchains or private blockchains?
Yeah, I mean, for me, a public security should be listed on a public blockchain. I've heard of some companies trying to create their own variants of it. Thus far, those companies haven't been tremendously successful with it. It remains to be seen if anybody has enough market power to do that. We at Securitize are not building our own private chain. We have no interest in that area. We feel that security should be public, all the information should be public, and it should be traded on public blockchains.
How about for private companies?
So private companies who opt to list securities are going to do that on a public blockchain because they have public investors. They have investors that are all over the world. Why would you hide the transactions from them? It doesn't make sense. We've seen, the only thing I have seen a little bit of is out of Europe, some data protection issues that have come up. For the most part, with what we do at least, everything is hashed, and so none of it's actually visible. And we hash identity on the blockchain as a component of what we do, and so that's sufficient around European regulatory law, which is the most strict in this environment. So for now, I don't think there's anything really needed that has to be on like a secret private blockchain that nobody knows about.
Do you think the future of the security token industry is going to be with a self-custodial flair or with these custodial entities?
Well, I think it's a mix, right? It depends on the investor. At the end of the day, an institutional investor needs a custodian to hold these securities. They can't do that, right? Whereas a family office who's relatively well-versed in technology can hold their own securities if they feel comfortable doing it. It's hard. It's not, the systems aren't there. We've seen some new stuff from Ledger, which looks super promising in that area for self-custody and for governance, which is another piece people don't talk about enough. With these securities, how do you transfer them? When do you issue them? Who has the rights to issue them? How is that controlled? So all those different things aren't really there yet. They're being built by a few companies, which will help. But I think at the end of the day, we're going to have self-custody, and we're going to have institutionals using custodians who are insured and regulated.
Given that now, at least some people who have that capability can presumably hold their own security token, what happens if they lose their private keys?
Yeah, well, I mean, in the security token space, it's not as big an issue, right?
Yeah.
So you lose your keys, and you can prove that you've lost them and that you had control of that wallet and everything was done properly through a proper forensics investigation, then those tokens can be reissued or burnt on the existing ones. So you can basically pull them back and reissue them. So it's not as much of an issue, but it's still a security, it's still a bearer instrument, so it has to be treated with the appropriate protection.
Is there any topic that you think has not been adequately addressed or has been talked about enough in the security token space today?
Capital formation. To me, talking tech in this space is actually not that useful. What we have to focus on is getting investors into the space. It's a very hard space. Carlos, my co-founder, said it last month. It was like 99% of the people didn't know. Now we've done this whole push around security tokens. Now 98% don't know about security tokens. It's a 1% increase. And so nobody knows about this space. We're talking to ourselves. We need to bring investors into it and really make them comfortable with it and stop focusing so much on tech.
What do you think is going to be the thing that makes investors want to invest in security tokens more?
To hear Jamie's answer to that question, go to our website, securitytokenacademy.com, and click on the interviews page.
Security Token Academy is on the leading edge of the security token industry. We've interviewed the top experts, lawyers, and business leaders from all over the world. Today's expert interview is with Dr. Stephanie Hurder.
Dr. Hurder is partner and founding economist at the Prysm Group. She's also founder of Retrain LA and got her PhD in business economics at Harvard University. She spoke to me about token economics and more at the Start Engine Summit.
You're an economist by training.
That's right.
And so I assume you know a lot about, what everyone's talking about in terms of token economics. So let's explore that for a little bit, both on the traditional security side and on the side of, actually a security token having some sort of utility purpose. So let's talk about traditional first. What should people know about token economics from that angle?
So for traditional when we think about security tokens, one of the big things we like to emphasize is that you need to be really clear about the rights that the token gives you. And a great example I like to think about, for example, suppose you wanted to tokenize a piece of art, like you have fine art. Art isn't just about the financial return. right? It's about enjoying the art. And then if you owned a token, you would probably also want some input into what happens to the art. Who does it get sold to? When does it get sold? How much does it get sold for? And so just issuing a token isn't enough. You have to think about the rights and the governance and the other pieces of the platform in order for your token to be useful and valuable.
Fantastic. Those are excellent points. How about on the non-security side?
Yeah. So if we're thinking about utility tokens, one conflict we see a lot is that people want a token that's used as a means of exchange, but they also want it to go up in price, right? And these two things are really at a tension. You know, if you're thinking about a token that's just used to buy and sell things, you don't want it to fluctuate in value that much, because then people end up thinking, you know, do I buy this product or service, or do I hold it? Or do I not want to buy your token at all because by the time I go to buy a product or service, it's worthless, right? And so when you're thinking about utility token design or any kind of token design, your token really has to have sort of one point. You know, you can't have a token that does multiple things at once.
What are you seeing now in the market, both from the issuer and the investor side, in terms of, you know, is everyone now just tokenizing, you know, traditional equity or debt, or are people still adding utility functions onto the security tokens? What's kind of the state of the market?
So I'm seeing a lot of tokenized assets, you know, obviously real estate, art, and those I think are particularly interesting. I don't see a ton of projects that have actually, as we know, the regulatory process takes a very long time. So I'm interested to see what innovations actually make it to market.
So, you know, you mentioned tokenized real estate, and prior to the tokenized real estate industry, there was the real estate crowdfunding industry.
Yeah.
And one thing that we always saw in that industry is that there's an adverse selection problem, right? A lot of the times, the people approaching you to raise money in this new way are the ones who would not otherwise be able to really raise money. How do we combat that?
I think that's a great point. And if you think about, you know, for example, the current state of utility token ICOs, you know, at this point, doing an ICO is almost a bad sign. It's sort of like, why couldn't you go out and do a standard equity round? And so I think part of this will come through diligence. You know, if we don't have VCs doing diligence, you know, who do we outsource this to? How do we make sure that companies are actually doing what they're supposed to? But I think it's going to be a challenge with any new funding mechanism.
What are some best practices around token design for STOs?
So I think, you know, your token has to be a functioning part of your entire platform, right? So a lot of times when we talk to companies, they come to us and they say, I want token economics. And we say, that's great, but your token is going to do best if it's a functioning part of a well-developed platform overall, right? So what is the business purpose? What are the contracts you need, as you know? What kind of market design do you need to make your platform function? What governance do you need?
Yeah.
And then what do you tokenize in there so that everything works together? So that's really how we approach things. So a lot of our process is taking someone who's looking for token advice and saying, no, let's back up and look at the entire platform and then think about how your token functions within that.
So you mentioned governance and property rights, which you know I think are two very important concepts that I think a lot of people just aren't thinking about enough yet today.
I agree.
Now, when it comes to those things, right, like if I am an art holder and I have a fractionalized piece of real estate or art via a token, and I want to decide what happens to that piece of art or that piece of real estate, it can become very unwieldy to figure out, you know, how I vote for the 500 fractional pieces of art I own, right? So what gives, because in regular democracy, when we want people to vote on stuff, we have a hard time getting a voter turnout, and I feel like the same thing's going to happen here for token governance.
I've actually heard this. So last week, we've written a research paper on governance design, and one thing I heard from many, many people is exactly what you're saying, is that we've set up participatory governance, and no one votes. And so I think part of this is when you're designing your platform, there's an impetus to just democratize everything. And you're like, we're going to have 25 votes a day, and everyone's going to take, and you have to think really critically about what are the core decisions that you're going to distribute. And then you're going to need I think we're going to end up seeing more centralized platforms. You're going to either need a leaders council or someone to just make decisions on behalf of the platform.
One thing I've always thought is the reason startups are startups is they have to iterate a lot. They have to pivot. It takes years to find product market fit.
Yeah.
And there's a lot of tokens that have been issued in 2017 and continue to be issued where they set into stone what their token represents, and then it's really difficult to change it, even if there is a voting structure. Do you have any comments around that?
I think it's really tough. And I mean, we even see that with some of the earliest platforms. I don't know where Ethereum is on its pivot from proof of work to proof of stake, but it's been taking quite a while. And so I think that's just one of the challenges that you have to think about. And maybe we will see more centralized governance because you need to be able to pivot, right?
Yeah. Well, what is your one wish for the security token industry in 2019?
To hear Stephanie's wish and the full interview, go to our website securitytokenacademy.com and click on the interviews page.
Thousands of people from around the world attended Crypto Invest Summit at the Los Angeles Convention Center in October. Security Token Academy was there conducting interviews with some of the biggest names in the security token industry. That's where we met Matthew Sullivan, founder and CEO of QuantmRE. The company is tokenizing real estate on the blockchain. Learn how you can unlock equity in your own home without taking on more debt and more. Take a look. This is CEO Matthew Sullivan of QuantmRE. Thanks so much for joining us.
Adam, it's a pleasure to be here.
Okay, so I'm a little bit nerding out on this because for many months on the show, I joke around with guests about when are we going to see the opportunity for me to tokenize and divide up my house so that my neighbors can unlock my equity. And now that I've met you guys, that may be upon us. Am I right?
It is. That's exactly what we do.
Oh my goodness, I'm just very excited. Okay, so
shall I tell you more?
Tell us, what is QuantmRE?
If you're a homeowner, QuantmRE allows you to unlock the equity in your home without taking on more debt. And
Amazing.
what we do is we do that by using cryptocurrency and the blockchain. So we are creating a token backed by real estate assets. The money that we raise from the sale of those security tokens goes into a traditional REIT structure that is audited, and it allows us to buy the equity in your home, which means that you get some cash without having to move out, without having to sell, and most importantly, without having to go back to the bank and borrowing more money.
Incredible. So for argument's sake, and I don't know if I'm using the right terminology, but there becomes like a cap table on my home where I own most of it and some other either person or a group of people own the rest of it in the pie?
It's less complicated.
Oh, even
than that.
less complicated.
So there's no transfer of title,
which
means that the banks don't get upset. There's no acceleration clauses.
Okay.
We don't become we don't insist that we move in and take your spare room. What happens is you sign an option agreement with us where we share in the potential future increase of the value of your home.
Got it.
And that option runs for 30 years, so you've got up to 30 years to either sell your home or refinance the option. And the way it works is that we agree a percentage of the value of your home, and that's subject to underwriting, and we can release up to 30% of the value of your home.
Wow.
What we then do is we then send an appraiser around, and if everything checks out, we write you a check for the amount that you raise.
Incredible.
When you sell your home, you pay us back together with a percentage of the increase in value of the home. So that's how we make our money.
And in the event that it stays flat or goes down?
Well, because it's a partnership, we take that risk.
Yeah.
Unlike a bank, where they take your money come rain or shine.
That's right.
If your house stays flat, we just get our money back. If it goes down in value, we run the risk, potentially, of sharing in some of that loss as well.
Got it.
So it's a true partnership rather than being
amazing.
Rather than being debt.
Okay, that is definitely, you guys are the first company that are stepping into the use case that we've been talking about.
Exactly.
And how long have you been around?
We started almost a year ago now.
Okay.
But before that, we had the concept for almost 4 years where we were looking at how do we tap into fractional equity ownership in people's homes.
Yeah.
The team that we've brought on have over 10 years experience and have originated over $250 million worth of this type of asset in the real world. So we brought on an incredibly experienced team to deal with the sort of specifics of this esoteric asset class.
We have the full interview with Matthew on our website. Just click on the interviews page. And mark your calendars, set a reminder for Tuesday, December 11th. That's when QuantmRE will be back on our show and featured in our STO Spotlight segment. You won't want to miss it.
Back in October, the Security Token Academy held events around the nation to signal the kickoff of the security token industry. We held security token meetups in Los Angeles and also in New York City. Attendees who purchased tickets to our 2-day cruise and conference in New York boarded the Spirit of New York yacht from Chelsea Harbor for an evening cruise along the Hudson River.
That was followed by the Security Token Industry launch event inside the Conrad, New York. Hundreds of people were in attendance as industry leaders rang the opening bell to signal the official kickoff to the security token industry. To view all of the videos from Security Token Industry Launch Week, go to our website, securitytokenacademy.com, and click on the Events tab and select Launch Event Video Library. The best part? It's free and contains a wealth of information, as usual. And, of course, mark your calendars for our next Security Token meetup. It takes place Thursday, January 31st, inside Maggiano's at the Grove in Los Angeles. Free food, drinks, networking, and more. You can find all the details on our website. Just click on the events page. You can also visit us on our Meetup page at the address on your screen. We had a great turnout last time, so be sure to RSVP to secure your spot to this free event. Hope to see you there.
All right, that's it for today's episode. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And don't forget to subscribe to our YouTube page so you don't miss out on any of our videos and expert interviews. I'm Amy Wan.
And I'm Adam Chapnick. And before we go, a big thank you to our Platinum corporate members, Merrill Lynch and Securency. We invite you to learn more about our corporate members by clicking on the directory page on our website. Okay, for everyone here at Security Token Academy, thanks for watching.
Learn about regulations governing cryptocurrencies and security tokens from around the world with our regulatory review. It's on our website, securitytokenacademy.com. Click on the Learn page so you can stay informed.